head over to Bloomberg Radio Surveillance. Tom Keene and Ken Prewitt on the phone with Barton Biggs of Traxis Partners. Let's listen in.
Barton Biggs with us. Mr. Biggs, the view forward here, if you are more cautious, which sectors are you most interested in, given not a bearish view, but a cautious view?
Well, I think that there's no question that the cheapest investment asset in the world, or the cheapest liquid investment asset in the world, I should say, are big, high quality U.S. stocks, and that runs the range from Procter and Gamble and Minnesota Mining to Deere and Caterpillar, and it includes at the core of it are big capitalization, high quality technology stocks, and everything from Cisco and Microsoft to EMC and Apple, and so that's a great asset class to be in. Mm-hmm. And I like the oil service area. I think it's too depressed, too much bearishness there. I think the REITs are still cheap, so there's things around you can do.
Barton, we have a story this morning that professionals, endowments and pension funds and the like, are getting more optimistic, but individual investors, polled by their association, are pretty pessimistic. Who's right and who's wrong?
Well, I clearly think that the right thing to do is to be bullish, and I don't think from the contacts we have with the big pension funds and pools of money, if they're becoming more optimistic about equities, that's a change, and because they've been cautious, and their equity ratios are low, and I think that's one of the positives in the environment is that the public has a lot of cash, a lot of buying power, and it's not earning anything on its cash, and the big institutions are at the bottom of their or below their equity benchmarks.
Barton, when you look at British Petroleum, you were a shareholder from time to time. How have you amended your view? You talk about the opportunistic Barton Biggs and the view from 35,000 feet. With or BP right now, are you brave enough to own the shares?
Well, you got to remember that we're a macro investor.
Yeah.
We don't buy. We don't try and pick out individual stocks. And yeah, what do I think about British Petroleum? I don't know. It's too speculative for me here. In that, I just have no idea what the long-term consequences. I mean, are these people down in the Gulf who aren't going to be able to fish, and when their business was fishing, or are they going to be able to sue BP for payments for the next 20 years? I don't know. So I mean, it's too hard to call.
What are your allocation to equities right now? I mean, you're caught in that conundrum so many seem to be, where you're not outright bearish, but you love the blue chip stocks. How much are you going to allocate to equities right now?
Well, I mean, don't forget we're a hedge fund, and I'm about 75% of my equity net long.
Ken, you want to get in here?
Yeah, the amount of your portfolio that's in cash, where is it? I mean, you're just parking it at kind of under the bed, basically?
No, I don't have any cash. I mean, I'm 75% net long. I'm short. I'm short certain areas of the world and the market, but
all right, Tom Keene and Ken Prewitt talking with Barton Biggs, talking about the equity markets and his strategy.